Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner with us as always to talk all things markets on this beautiful Friday afternoon. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
I am in the best mood. It's like 70 degrees, 75 degrees and sunny. So it feels like fall is on the horizon, even though I'm sure we're in for another warm up right around the corner.
Yes, it is nice that it's a little cooler this week, and looks like next week's going to continue that trend. And for those of us headed to the Missouri State Fair next week, we appreciate colder weather.
I bet you do. All right, we're going to talk supply and demand numbers. We're going to talk retail prices and some consumer sentiment. But to kick things off, let's recap what happened this week in the markets.
Yeah, on the cattle side this week, it was a good week for cattle markets. Those fed cash cattle were up $3.80 this week. On the feeder cattle side, those markets around the country were anywhere from $1 to $5 higher on the week. The October lean live cattle futures closed up 55 cents, while the September feeder contract was down a little more than 50 cents, partly due to what was September corn futures that were up 27.5 cents on the week. On the beef side, the choice box beef price was down $3.50. That actually puts that choice box beef price nearly $50 below where it was a year ago at this time. On the hog side, we also got strength in cash barrel and gilt prices, up about $1.60 this week. The October lean hog futures contract was up $1.65. We did lose on the pork cutout value about $3. It leaves that pork cutout value basically unchanged from a year ago. Lower butts and ribs and bellies led the way for the lower pork cutout value.
It's really been interesting watching some of these movements continued on the cash hog side of things. And I have to wonder if some, not supply issues, but we're looking to meet orders and have definitely seen some positive movement on the price side of things again.
Yeah, so I'm curious, as we tended to see feed prices move lower and hog prices stay strong, if we ever incentivize some expansion, and just how much expansion can we handle before we start to see some lower hog prices. We'll wait and see whether that plays out, but I get the sense that is more likely as we move along here.
So let's talk slaughter numbers as we take a look at this week on the cattle and hog side of things.
Yeah, so USDA tells us for the week ending August 13th, a run of 647,000 head of cattle this week. That's 4,000 below where we were a week ago, but 11,000 above where we were a year ago at this time. On the hog side, a run of 2.338 million head of hogs. That is 6,000 head more than a week ago, but 70,000 head below what we did a year ago.
And as we look year to date, how are things looking?
Yeah, so we can kind of continue the trends we've seen for a while. So cattle slaughter year to date up 1.2%. Hog slaughter is actually down 3.6%.
I should unmute myself. The big report out today, supply and demand numbers. As we take a look at this, I always love this August report simply because it's that first survey-based yield estimate. So let's walk through these numbers on the grain side of things, then we'll get into the livestock, and then we'll talk about the big picture.
Yeah, so I always find this one's the interesting one as well, because I don't think anybody's happy today with the USDA report. And I saw someone else sum it up very well. Those in drought feel like USDA's overestimated yields, and for those not in drought, USDA's got prices too low. So nobody happy. But USDA said corn yields at 175.4. That's a decline relative to where they were in July of 1.6 bushels, but frankly pretty close to what pre-report expectations were in terms of corn yields. And I think there's going to be a lot of variability. There are dry areas where corn yields are going to suffer. I think we have some states that are going to do very well. On the soybean side, I think that might have been a little more of a surprise. 51.9 bushels was USDA's estimate. That's actually up 0.4 of a bushel relative to last month, and also exceeds expectations by a similar amount.
And I would anticipate there's probably going to be a lot more of those adjustments as we move forward in the coming months.
Yes, and again, I think it's important to remind everyone that this is USDA's first kind of survey of these yields. As much as maybe in the past we've had folks out there who didn't like them, at the end of the day, they've not been all that unaccurate, if you will, in terms of where we end up with final yields. So we'll wait and see, but it certainly suggests to me that pretty good corn crop in the bin at this point. Maybe soybeans, just given some lateness in some parts of the country, might have more changes coming as we look ahead.
All right. What else do we need to take out of USDA supply and demand numbers released today?
Yeah, so I'd start on the price side for livestock. Higher cattle, higher hogs, higher turkeys, lower chicken prices tend to kind of be, and I say that, USDA is forecasting both 2022 and 2023. That kind of holds for both years, if you will. So higher cattle and hogs and turkeys and lower chicken. To me, that's some maybe demand strength that's helping us, especially in cattle and hogs. So positive, I would say, in some ways, just given those higher prices. Now, on the supply side, what did USDA do? I think the big one here is for 2023, USDA raised their beef production estimate by 325 million pounds. That may sound like a lot. I just want to remind everyone that they're currently projecting for 2022 28.1 billion pounds of beef will be produced in 22, and they're now saying 26.3 billion pounds in 2023. So that's still a very large cut for 2023, even though they raised that 2023 projection.
How much does that come into play when we're looking at price projections for 2023 as well, specifically talking on the beef side of things?
Yeah, the uncertainty of those price projections is, I guess, where I'd stay focused in that. So nearly 2 billion pound cut doesn't happen very often. I think you and I talked about it already. So it happened in 2014. It's one of those years where I said even Scott Brown could be a good cattle producer in 2014. The previous time was 2004. Both we get pretty strong prices. So that kind of cut we still could be underestimating the underlying price strength that could happen next year. Knowing exactly when that starts, it's not today. That's not where we are in terms of feedlot inventory, et cetera, but we're going to get a lot tighter. And I think that's one of the potentially real positives. Again, the thing that could derail that positive, of course, is a recession that makes consumers switch away from beef.
In addition to that, how much do our input prices come into play when we're thinking about productivity and profitability on the beef side of things at the same time? Not just corn, but I mean, thinking about hay as well.
Yeah, so I think that this is a little bit of both ends of the spectrum here. So if you're in a region of the country that hasn't had drought, as a cow-calf producer, I think you're very quietly grinning to yourself about what might be coming. If you are in a drought situation, you not only have to deal with not having much pasture and hay, but you don't have anything to sell, or you have less to sell, as you might have to cull on that herd in the short run. So again, I think those that haven't been in drought probably look forward to 2023, 2024 and can smile. So we'll wait and see how drought unfolds. We've had some areas of the country where things have gotten better. We still have areas of the country that are extremely dry.
All right, let's switch sides of things and let's talk the consumer and the demand side of things as we take a look at retail prices. Let's walk through some of those numbers.
Yeah, so on the beef side to begin with, so the choice beef retail price was $7.62 a pound in July. That was actually 4 cents below June, which reminds me that the impact of beef on the overall CPI for food is moving it in the right direction. Pork was $4.94. That's a penny above where it was in June. Now let's make sure. So I go pre-COVID on us. In July of 2019, the choice beef retail compared to July of 2019. Let me get the right thing there. The choice retail beef price is 24% above where it was there in July of 2019, and pork 26% above. So still much higher than where we were a few years ago. It's maybe nice to start to see some slowdown as inflation has certainly grabbed the headlines, it would seem. I think you can start to see signs of consumers, again, purchasing down, if you will, as high gasoline prices, et cetera, were eating at budgets. Higher ground beef prices, lower steak prices. To me, that continues in the July data that we got, and reminds me to say that I think consumers are shifting at least a little bit.
Anything else we need to take out of those numbers when we think about the demand picture and the long term? I guess thinking about how that relates back to what producers are thinking and what they need to be paying attention to with these types of numbers.
So I guess I continue to say we've had all this focus on demand. We've had all this focus on what's the effects of an economic slowdown / recession, however you want to define it. And frankly, demand has been incredibly good through all of those things. Doesn't mean it can't change going forward, and we need to continue to watch. But let's not forget just how good demand has been. And I always say growing demand is the time I want to be in an industry. So to me, we're still getting positive signs despite what were some pretty large clouds starting to form. Lower fuel prices and some other costs maybe starting to slow, to me, is a positive. I'm not saying whether we will or won't eventually declare ourselves in a recession, but economic slowdown certainly hasn't seemed to take the shine off of meat demand.
And economic uncertainty seems to have a little bit of a polish to it, looking at consumer sentiment in August compared to July.
Yeah, that's right. So, so two things here in consumer sentiment. So first of all, the overall index was 7% above in August relative to July. I always like to remind us that's still 22% below where it was a year ago. However, when you look at the components here for a minute, I think this is the uncertainty really highlighted in this report. The index of expectations were actually 16% higher in July relative to in August relative to July, yet 16% below a year ago. So expectations are more positive as I think consumers see some inflation help coming. Yet the current situation index, it was actually down 4.5% in August relative to July. So consumers still fighting through the current situation, but they're seeing more positives on the horizon. Let's hope we realize those. But that's really what's at play right now.
And I would have to say too, probably some declining gas prices, while still well above where they were a year ago or even 2 years ago, have been on the slide down, and that has to maybe give folks a little bit more money in disposable income wise, and maybe helping some of those families breathe just a little bit easier right now.
And very well put. And I would say on top of that, it's margins from farm to retail don't have to be as high when we have energy prices that are falling. So it's good in a couple of ways in terms of what's that mean for producers. You might get a bigger share of the consumer dollar than otherwise would be the case, and then consumers have more flexibility to purchase your products.
Scott, that's it for us today as we look ahead to next week. A slower week, but a big one for us.
That's right. I'm curious to see cattle on feed. Are we going to see a big slide in terms of placements. We'll see as we get to next week's report, but we know that day is coming and we're getting a lot closer to it.
Scott, great to see you. Have a wonderful weekend. We will talk to you to talk cattle numbers next Friday.
That sounds great, Megan.
So every weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there. And if you'd like to check out what's going on the grain side of things, check out the weekly commodity market update with Ben Brown and Brownfield's Will Robinson on Tuesday afternoon. Have a great weekend. I'm Megan Grebner for Brownfield.